Hi, everyone. A massive welcome to the Friday Roundup, the episode each week where we recap the biggest news stories of this last week in crypto. There is never a dull moment, and I love to dive a little bit deeper, provide a little bit of nuance and my perspective on the situation. So let's dive in. We don't have much time, and I want to start with Fidelity. So Fidelity, if you weren't aware, are one of the biggest investment banks in the world, and they have been heavily into crypto and Bitcoin, mainly Bitcoin, for the last 4 to 5 years. They started off very slowly, as most of these investment banks do, and now they're moving much more heavily into it, providing Bitcoin and custody services to their more high net worth clients. So the demand is absolutely there, and we're seeing that through likes of JP Morgan, Morgan Chase, BNY Mellon, other massive investment banks as well. So make no mistake, the smart money is positioning. And I wanted to bring this up because in bear markets, it can be very easy to lose your way of seeing the future outlook and where this is all going when you want to forecast out and create that investment thesis. So again, Fidelity is 4.5, I should say, trillion dollars US under management of assets. So that's the amount of assets they manage for their high net worth clients. So they need to know what they're doing with their money, and they need to be relatively risk averse, but they also need to spot opportunities and move their clients' money into those opportunities when they present themselves. So they certainly see the future of Bitcoin. I just want to read a few excerpts from their latest pieces that they've come out with. So banking giant Fidelity, they've said the Bitcoin network is arguably the most decentralized and secure protocol in existence. So that is a huge vote of confidence from them. They also said the Bitcoin network is an incredibly verifiable, secure and transparent protocol. So they're really happy with the security layer of Bitcoin. And it's verifiably, it's the trust over many years has been there. It's never been hacked. It's quite trusted. It's secure. And when you're relatively risk averse with your capital and assets, that's what you really want to be investing. If you're looking into crypto, especially in these times, you're not necessarily wanting to go high risk, into every altcoin, metaverse, NFT. A lot of these high net worth individuals, they want exposure to crypto, and Bitcoin is the most highly liquid. So lots and lots of volume there. And it's the most trusted, and it's been around the longest because it is the original. So I wanted to show you that because Fidelity, it's just a huge mover in this market, and that they really have led the charge from the investment banking side. So I wanted to share that. Now, I wanted to get into just a bit of on-chain data. So we have a Glassnode platform account that pretty much can give you exclusive data. This costs a lot of money to actually get access to. You can shark off Twitter, and I do that a lot. It's fantastic. But when you have access to the actual data underlying the market, it is incredible. And we could look at this all day. I could do a whole video for an hour of every single metric on here. So I'm just picking one that I think is really, really useful to look at for you right now. So the realized price is the average cost basis of investors when they get in this market. So it looks at all of the investors previously. It's all divided by supply. I won't get into the nuts and bolts of it, but essentially, historically, whenever Bitcoin has ducked below the average buy price, so a lot of investors are currently underwater at the moment, it has historically been an incredibly good place to dollar cost average or inch yourself into the market. So just looking previously here in 2015, you can see we ducked below the realized price or the cost basis. And we're under there for a little while, but as you can see, we weren't under there forever. We obviously came back above, had the next leg up in the market, and then we do the next cycle. So you can see there, it's very cyclical. Over here in 2018, 19, so we ducked under the line there, then got it back above it, hit it again with the COVID crash, but really, apart from that black swan there, we've stayed above it until now. So we are now ducking below it. We know we're in a bear market. We know we're suffering some pretty severe macro headwinds, so negative news overhanging with Fed and whatnot. But at the end of the day, you just have to look at the data, be very, very clear on what you're looking at, because I'll say it ad nauseum, markets are forward looking. Right now, inflation is just slowing down a tad. We're seeing a bit of deflation. Markets are looking ahead for the next big narrative. I think that's recession. We're seeing that deflation come in, then we'll see recession, and then we'll likely see risk start to take off again as these cycles really move through the macro. So you really want to not get caught up in the moment too much. You really want to focus out and what the cycle is telling you. Where are we going? And this is telling me we are, if we're not at the bottom, we're very, very close. And if looking at the data now compared to previously, we're very much in line with high value areas for investors to get very, very interested in. So I might just zoom in just a tad on this one. So you can see we are oscillating underneath that line. And to be absolutely fair, that pretty much lines up with 22,000, which is the 200 weekly moving average on the chart. So a huge confluence of indicators there pointing towards how important getting above the 200 weekly moving average at around 22,000 is. If we get above that and flip that resistance into support, so get back above it, test it again as support, the confidence will absolutely return to this market, and we will see a bit of a rally. So that's what we really, really want to see, and it will give us a pretty good indication that we're starting to get out of the bear market. So let's move on to more news. So NYDIG posted, excited to announce that NYDIG is the official Bitcoin payroll platform of the the New York Yankees. Using our Bitcoin savings plan, employees of the organization will be able to allocate a portion of their paycheck to Bitcoin. So this just highlights a broader trend to me. Sporting organizations and sporting celebrities, athletes, they're very, very interested in Bitcoin and crypto. I mean, they've got a lot of smart people in their ear as well, forward looking. I mean, they've got a lot of money. They're looking to hedge themselves for the future. And it's very, very easy to see that Bitcoin is that future or might be part of that future. So that is happening more and more. And it's just great to see. All right, Arthur Hayes, this is a bit more macro based. So I'll just touch on it very, very quickly. So this is Arthur Hayes, is the ex-CEO of BitMEX, that's the leverage institutional platform that used to be used in this market, used to be able to move the market quite well. So he says, must watch the Japanese yen and the euro, expect an intervention to weaken the USD if the Japanese yen gets to 150 or the euro under 90. Intervention means the Fed printing money. Printing money means Bitcoin number go up, situation fluid. Now, why I'm bringing this up is the macro is in such a state where a lot of fiat currencies are beginning to break against the US dollar. And if they do, it creates tremendous difficulties and challenges for the world. The United States is doing its thing and tightening the US dollar. But what we all need to understand is the US dollar is the global reserve currency. It is what's used to denominate all debt-related instruments, if not most, if not all. And all the world's trade is pretty much denominated in the US dollar. So we are seeing that system begin to crack because the US is tightening so hard that basically making the dollar go up, creating a bit more scarcity, quote unquote tightening. So you really have to, again, look what's coming, because what is coming is not what's been happening now. Something will break the longer this rate rising regime continues. And when that does, we will pivot straight back into pausing first of all, and then straight back into QE and easing and getting rid of some of these rates, because we're moving into recession. And a lot of these countries rely on the liquidity of US dollars being pumped into the system. The market is so hooked, like an addict, on all this money being this stimulus and liquidity, that as soon as it tightens up and you start to restrict and pull back, the system isn't built to withstand that, and you will see defaults, you'll see collapses like we saw in Sri Lanka. I saw Argentina's looking at an almost 90% inflation rate. So yeah, we're seeing dominoes begin to fall. And if these currencies begin to weaken that much against the US dollar, Japan tightly linked to the United States because they buy a lot of US treasuries, there's a domino effect in there. I won't go too deep. It's what we cover with our advanced clients. But it is all interconnected, and the US is in talks with Japan right now to see what the hell are they going to do, because they've pretty much undertaken the path of QE infinity. And QE, if you weren't aware, quantitative easing, it's essentially money printing. They're creating more bonds, putting more liquidity, injecting it into the economy and giving it to banks. So that's essentially where it goes. But I wanted to bring that up because we need to have the forward outlook, and that was the theme of this episode, just keep thinking forward. Okay, so this was a big bit of news. So Celsius acknowledges $1.2 billion hole in the balance sheet. Now, the big news about this, that really wasn't, that was pretty much known, but they've gone bankrupt this week. And again, this has been very much known information. It was really coming to this over these last few weeks. So it should surprise no one. I want to just throw out there that we won't see, there's been a little bit of panic with this news with a few investors. And I've just brought up the fact that this is very much priced in to the market right now. And it's not like Celsius has a huge amount of Bitcoin or multiple different cryptos that they're going to suddenly need to dump onto the market. That's just not the case. A lot of their assets now are actually based in Cell. And if you own that, you're in a bit of strife. But this won't move the market really at all. Again, I'll just reinforce that drop to 17,800 was a capitulation, panic-induced drop. And I'm more confident now than I have been for a while that was the bottom in terms of capitulation, just because we had so many factors line up. Three Arrows Capital, so prime brokerage going under, depegging, we had Luna Terra, all of these things just happened at once. And that's when you really see those big flush crashes that mark that final bottom. Doesn't mean we're there yet, but I just wanted to bring this up because Celsius, don't get too worried about what's happening here. They're going to reap what they sow. They turned into a bit of a Ponzi scheme towards the end there. Be very, very careful with your keys as well. Make sure you are securing your own crypto, taking them off exchanges, being quite defensive from these lending platforms, at least for the interim. Something to note as well, DeFi has been up and running 100% through this entire phase where all these centralized platforms have gone under or have been doing dodgy practices. So just keep that in mind, because DeFi, and I saw one of the Fed governors. So one of the Fed governors came out and said, DeFi will revolutionize the financial industry. So even traditional finance is looking ahead and seeing the good with the bad. And you really have to separate centralized finance and decentralized finance, because they are two different sectors, really. So just keep that in mind. Let's move on to, I wanted to just highlight this incredible review we had in Trustpilot from Helene. So she said, what a great bunch of diverse leaders in their fields with the up-to-minute resources covering all the ins and outs of crypto and the right mindset to minimize risk and make strategic investments based on evidence, not just hope. So I wanted to bring this up because that's why I showed the Glassnode chart. We want to base a lot of our investment theses on as much data as possible. So what we look at in our technical analysis, you want as many confluent indicators and metrics as possible. It doesn't guarantee anything, but it puts the odds in your favor. Support through regular videos like this one, Facebook groups, and the most comprehensive newsletter you ever see is terrific. If you're not on a newsletter, get on it. It's terrific. If you're serious about crypto managing risk, do it the right way with CCI. It's a lovely review. Thank you, Helene. And I wanted to bring this up too, because if you are a VIP client or a mastermind client, you haven't left us a review, good, bad, or ugly, please do so. It helps us a lot. And it's great to see the feedback of a satisfied client, an extremely satisfied client, or otherwise. So just let us know, give us your feedback. It will help us out a lot. Also, just quickly, masterminds, if you are watching this, I just wanted to point out that our technical analysis maestro, Stephen, is back on deck, and he is providing just absolutely genius signals for us in the group to Facebook every few days. So if you see something interesting, he's going to post it here. And VIPs, if you're interested in Mastermind, this is the kind of content we provide, not only in the Facebook group, but also in Discord. We have a lot of trading information going in there. And I don't want to suggest that we are implying that short-term trading is the way to go here. This is very much short, mid, and long-term. If you wish to do short-term trading and things like that, you can do it. But we're really much more geared to the more macro cycles, mid to long-term plays, especially in Bitcoin and to a degree with the altcoins. So just keep that in mind. We're really trying to cater to as many people as possible, because there's a lot of people out there that do want to trade in these conditions, and it can be very confusing, and you really don't want to just dive into it without knowing what you're doing. So we have the support on hand if you are keen to join the mastermind, so go for that. All right, guys, thank you for watching the Friday Roundup today. As always, I've had a blast. Any questions or comments, leave your feedback below. And if you want to undertake anything I've just discussed here, contact the team. And again, please leave us a review if you are free for that on Trustpilot. That would be amazing. So have a wonderful day. Ta, bye.